Hello everyone, my name is Mwelwa Chibesakunda and I'm at the Intercontinental Hotel where we have just witnessed something special that has come from Zambia Sugar's final year presentation of the results. And with me today is none other than the CEO of Zambia Sugar, Mr. Oswald Magwenzi, who is here to tell me a little bit more about the performance at the end of 2023. Oswald, welcome to the Financial FIZ Show.
Thank you for having me.
Also, this morning was very, very special. I'm counting this as your third event with shareholders of Zambia Sugar. Tell us about what your reactions were when you finally got a chance to see this year's results, which obviously come on the back of last year you making a significant announcement on joining the billion kwacha club. How were your reactions to this year's results?
So, thank you for that question. The reaction is one of pride. This is a very significant accomplishment. It's also one of excitement in terms of where we see ourselves going. It's not often that you can consistently achieve a profit above 1.2 billion for 3 years in a row, given all the fluctuations and the challenges that we have in the markets. So it really talks to our resilience. It talks to the robustness of our strategy, that we are continuing to be able to deliver under the challenging conditions that we face. So they were very excited about what we've done.
I can imagine. But with any great performance, it's obviously underpinned by certain strategic pillars. This morning you shared some of those. Are you able to just delve into some of those for our audience?
Yes, we have a very well-defined strategy. We continuously refine it in the elements. So let me just start by saying every business exists to serve customers and consumers, and we are no different. So we start by customer centricity. So we are guided by what our customers want, what the consumers want. That's the first pillar of our strategy. So the second one is we are in the business of making food. So we need raw material, which is sugar cane, for us to be able to continue to make sugar for the country and for the continent at large. So the second pillar of our strategy talks to the sustainable supply of sugar. So we have several strategies, one of which I shared this morning in the farming system. We're investing in irrigation systems that are much more efficient so that we can continuously push the envelope in terms of production. So that's the second pillar. The third pillar has to do with being operationally excellent in the supply chain. So here we are looking at cane growing, the operations that have to do with that. We need to do them at a level of excellence. We're looking at our factory operations, which is how we convert the sugar cane to sugar. We need to be very good at what we do there. And then we have to move this sugar into the markets. Logistics excellence is an important part of what we do. And then obviously making sure that operationally excellent in terms of our commercial operations. So that's the operational excellence pillar. Then the fourth pillar has to do with making sure that we're sustainable, of course. I did explain this morning that when you produce food, it's got commodity characteristics. We have a strong brand, white food. Obviously, in the food business, affordability is key for consumers. So we work very hard to make sure that we produce the sugar at the lowest cost. So we have this pillar that talks to being sustainable low cost going into. The other pillar of our strategy has to do with people, capability development. Nothing happens without people. We all know that. It's almost obvious, but we always have to be aware of the fact that the capabilities that people bring that actually enable us to do as well as we do have to be developed and continuously. So that's one of the things that we focus on strategy. We also, in the food business, as I said, So advocacy becomes important. We're talking about the unique exports. We're talking about creating a favorable market environment. Particularly for us, what we saw in the result presentation, the fact that our profit after tax went down, and the reason for that is that the sugar that we buy from growers or our growers is taxed at a much higher rate than the sugar that we produce. So we are engaging with the government to make sure that there is some harmonization on that front, so that we can continue to promote the growth of our growers, because that's a significant development impact, and also it makes our supply chain much more easy. And then finally, the last pillar is about investigation. Last but not least, we need to continue thinking about creating new revenue streams, including our revenue baskets. We do that firstly within our current product portfolio by making sure that we have different products, but also looking at new revenue streams in the future. Here we're thinking of things like fuel ethanol, if it's viable to produce. We're looking at power generation, investing in electricity first to reduce our costs, and then to create a revenue stream in the future if we can sell the power to. Let's hope there's a power deficit in the Southern African region, and see that there's an opportunity to live in our current region. So those are some of the strategic pillars that underpin the growth that you continue to see.
Absolutely, and that's a very comprehensive explanation, and it probably speaks into the reason why you've had significant growth in the top line. One of the things that we have observed is that you've been very consistent in your messaging on route to customer. Tell us a little bit about why important that strategy is in the overall growth on not only the domestic but also the international market.
Yeah, so if you look at our mission is to make safe food, which is abundant, available, and affordable for consumers. So making food abundant, making it available, talks to you being able to reach the consumers. And the strategy we use to reach consumers is the route to consumer. It's just a technical term that literally visualizes that you start at a production plant and there's a route that you follow to eventually get the product into the different parts of the market so that consumers can access it. So we have been in the past 5 years doing a lot of work. Our commercial team has done some tremendous work in terms of, firstly, what we call the first mile. So the first mile refers to the space between the production plant and our initial distributor or reseller. So we've done a lot of work to optimize the logistics in that space. Then beyond the resellers, we are now looking at how to actually get the product and investing in more efficient ways, support information gathering filters to make sure that we are as efficient as possible in terms of moving the product beyond retailers. This is a partnership because our job is to produce, take it to the retailers, partner with them, then make sure that they can leverage our capability to be able to reach the market. So that's what route to consumer basically is, moving from the plant to the resellers into the market. That is the route that the product follows to get to the consumer.
Absolutely. Now, you've touched on one of the challenges that businesses are facing: illegal sugar that's coming into the market. What other challenges has the business been facing, and how robust is your strategy in terms of meeting and mitigating some of these challenges?
Let me just talk about illegal sugar for now. So we have porous borders, and we have surrounding neighboring countries that also produce sugar, and there are agreements in terms of how we can trade between each other and so on. But we are faced with a situation where there is an influx of illegally imported sugar that obviously reduces our market share in the domestic market, which is a loss to us in terms of revenue, but also a loss to the country because the higher our revenue is, the higher the tax. So this is a concern for not us as a business. It's also a concern nationally. We are working with ZRA, we are working with the police, we are working with the Ministry of Commerce to make sure that we tackle this problem. But realistically, this is something that we can only mitigate. It's never going to go away. So what we're trying to do is really focus more on being more competitive and leveraging the strategy and then all the things that we're doing. So what are the other challenges that we are facing? Firstly, there is significant cost escalation, particularly in the areas of fertilizer cost, power cost, and now with the depreciation of the kwacha, we can expect that fertilizer costs will go up significantly because they are denominated in foreign currency when you translate. So the fertilizer that was costing me $1 before the depreciation, and the kwacha was at 17. I would translate that to 17 kwacha. Now at 22, it means that I now need to find 22 kwacha to access the same fertilizer. So that is one of the challenges that we face. There's also the foreign currency component in a lot of the things that we do. Our maintenance processes depend on us importing spares and to some extent specialized engineering skills. All these are denominated in foreign currency, and the depreciation will be going up. But we have a counter effect of the depreciation because we export a significant amount of sugar. We're able to mitigate because our own revenue also increases. So $1 that I earned from my exports was 17 kwacha before, now it's 23, so that it kind of cushions or mitigate the cost. So cost increases are a major challenge. So those will really be the main challenges that we have.
Your business now at the end of the financial year now has declared significant dividend. We have obviously been monitoring, the dividend pattern from back in the days when, we were at Project Power, you had a heavy capex, but now to a point where now investors now are seeing a much higher dividend from the previous year. How important is it for investors to see this particular growth in dividends, and do you believe that it will spur, especially for your future aspirations, to bring more investment?
So when you buy shares in a company or you invest in equity, it's a long-term play. So you are not going to get your return tomorrow. So I think Zambia Sugar is a very good example. You see, in the past 10 years, we made the investments. We expanded the factory. We expanded the cane growing area under cane, and we doubled our refinery. So you can see there is an investment period, and then there is a period where you can reap the returns from this business. That's what you say. So we are mirroring the expectation of equity investment being long term, and if you stay the course and stay long enough, and you are investing in companies with fundamentals, for example, your returns will come. And you can see that we are more than tripling the dividend from the previous. This is really to reward our shareholders who are very patient with us, and now we are in a position to return this money to them. what also that does is for any people that want to invest in the program, you can see that we keep promises we make to investors, and with the plans that we shared this morning, we're very exciting future ahead of us, underpinned by a robust strategy, a market that's growing, and a stable political environment. So all these are elements that if you invest in them, in the context in which we operate, you can really expect some good chance on your investment.
Absolutely. And just as a final question, you touched on you talking about some of the plans that you have. What is the near to long term outlook of things in terms of projects that and obviously some of the exciting things, activities that we're doing?
So let me start by what we're trying to do with our existing business. So we are working flat out to make sure that we realize the full potential of our Nakambala estate. What that means is grow sugar production, the 400,000 tons that we are currently at, to 450,000 in the next 3 to 5 years. And then make further investments to then increase sugar production to 500,000. When we do that, we believe that we have fully utilized the potential that exists at our country state. So beyond that, we now have to say, where is the growth going to come from? Because we're all talking about growing demand for sugar, for population growth, growing demand for sugar, for food manufacturing, growing demand for sugar, for regional demand. About 680 million people in the region need food. A lot of the foods that we eat, bread and others, all have sugar in them. So where is the sugar going to come from? That's why we are now saying we will fully utilize our potential in Nakambala, and then in the future start to get into a conversation of developing a new estate completely, so that we can meet the future needs of the country, the consumers, and the region. So that's really kind of our roadmap, is realize our full potential, and beyond full potential, create new estate.
Now, this is exciting news, and also thank you so much for sitting down with us. To our viewers, this has been the CEO of Zambia Sugar, who this morning presented the final year results for 2023 with a stellar performance. Congratulations to you and your team, and Financial Insight wishes Zambia Sugar all the best in the coming financial year.
Thank you for having me.
Ladies and gentlemen, welcome to FIZ Shots on the FIZ Show. My name is Clarence, and we're here at Intercontinental Hotel. It's been a fantastic day with Zambia Sugar PLC presenting last year's financial results, and we've had a fantastic presentation from the CEO. And I'm now sat here with Nyondwa Mukosa, who's the acting Chief Financial Officer of Zambia Sugar. Welcome to the FIZ Show.
Thank you so much.
Okay, so now that the presentation has been done, we've got you here in the FIZ studio, just so you can give a little bit of a reaction, what you feel about those results. How do those numbers make you feel? What's your reaction to the performance of Zambia Sugar this year?
It is an exciting performance, and I think we've had our own share of headwinds, but we've crossed that, and with exciting results, and we've been able to bring resilient, I would say. Yeah. So it is an exciting time for Zambia Sugar.
So how does that make you feel about the financial prospects for Zambia Sugar going forward off the back of these financials?
The prospect is very good. I think Oswald shared about the outlook, the strategies for the business, and from what you can see is Zambia Sugar is growing, and the outlook is very good. So it's actually the financial performance is, I would say, prospects as well. Is something that every investor would look out for and to be excited about.
Great. Okay, so for some of our viewers who may not know, if you look through Zambia Sugar's performance statement, what you'll see is that there was an increase in costs, overall costs, operating costs of about 10%, and yet Zambia Sugar managed to deliver an operating profit. So there's got to be something going on there. Do you have any insights that you can share about how you managed to register profit in light of, or in spite of, shall I say, increasing costs?
Yeah, I think when you look at overall the environment that we're operating in, we've seen an increase in costs, and this is mainly coming from the fertilizer, the chemicals, fuel costs going up. But at the end of the day, we've very little control over that. So what we did is to work on what control we have, areas of control. So optimizing our costs, increasing our production, looking at the efficiencies in the plants, that helped manage the cost escalation. It hasn't been an easy, but I think it calls for just the team optimizing the efficiencies in the plant. I think as you see, the sugar industry is a fixed cost environment, but looking at diluting those fixed costs is what is key. So we did have strategies put in place where we're looking at optimizing, managing the costs through bulk buying, also just the interactions with our suppliers. And yeah, it has shown results, I would say, despite being in a difficult environment.
Well done for that. And also, I'm sure for the investors out there, investors like to see very lean gearing on the balance sheet. And trust me, if you look at Zambia Sugar's balance sheet, you'll be amazed. They're so thinly geared. And what I noticed in the financials is that in the year under reports, they've managed to almost double the interest cover from something like 16.5 to somewhere around 31 interest cover. Now that's a very good ratio. It shows that you are basically almost carrying no debt at all, no balance sheet. So what's the strategy behind that? Which direction are you taking your gearing approach balance sheet?
Yeah, so we see where we're coming from. I think the past few years, Zambia Sugar has been highly geared and we had high fixed costs. So we're just coming off, paying off that, and we're resetting. I think when we look at the 5 years before, our levels were quite high. So we've managed to pay off that debt, but I wouldn't say it's permanent, because I think at the end of the day, you see, we do need to have a portion of gearing the business to be able to invest. And when you look at what Oswald presented, we do have huge capital process coming through. So resetting the business to be able to pay outstanding debt and re-looking at the gearing levels is what we're doing now. So yes, we've paid off, but I wouldn't say that's our final position, because we're looking at now how to be able to fund the upcoming projects.
Fantastic. And moving on quickly, I think there is something that's glaringly obvious in that performance statement, and that's the T word, tax. So there's been an upsurge in, just in case you're not aware, dear viewer, an upsurge in the amount of tax that Zambia Sugar paid this year. The overall tax rate that the company suffered increased by 3%. Now, for any company out there, an increase in tax of 3% is relevant. So I'm sure that it hurts Zambia Sugar in some way, because we've noticed that your actual net profit dipped on account of that huge tax bill. So what's going on there? What happened? Was there changes in the tax regime, or what happened?
So you're right. The thing where everyone will want to pay less tax, but when you look at the way Zambia Sugar is structured, we do have a growing section as well as we buy from the growers.
Yeah.
So we have a blend in the tax rate, which is from manufacturing as well as the agro tax rate. So in the year that just ended, we saw an increase in our grower cane uptake. So I think as you see that we're trying to also carry the growers with us. So the growers are also growing in terms of the performance, and we did buy more cane from the growers, which is usually taxed at 30%, which is the manufacturing rate, and that's what drove the shift in that. But at the end of the day, I think despite it being downside on my bottom line, but it's brought growth within our stakeholders as well.
So from an operational point of view, you see it as a positive because of the underlying businesses that you are supporting by being able to buy from cane growers.
Yes, it is a positive. It is a positive because the cane growers are also growing, so which is a positive for the business. If we want our production to grow, we need to grow from one side.
Fantastic. And the dividend, of course, we've got to discuss that because, ladies and gentlemen, it's huge. Okay, I think you are giving away in total 300 and what dividend?
Well, so the total dividend is 349.
The 349 way per share.
Yes.
Okay, and part of that is 145.
So we do have
149. That's like a special dividend.
So we do have 158, which is a special dividend.
158.
Yes.
Okay.
Then and the normal dividend of 191.
Okay.
So our dividend policy, which would refer to the normal, is the normal out of the free cash flow. But what we've seen towards, I think, looking at the performance of the business, we've seen great growth in the improvement and the operating profit. When you look at the operating profit and the outlook that also shared, shows the growth in there. So and the shareholders have been patient with us.
Yeah.
I think when you look at our history, we haven't been able to. We were not able to pay for a period. But now with the growth, and I think the board has decided that we should recommend a special dividend. That's to take up the shareholders to appreciate for the patient. Also the prospect of the business growth.
Fantastic. And obviously shareholders love to receive dividend, and this is why they're primarily interested to see what your gearing looks like in order to know whether you'll be paying interest to the bank or dividends to them. Is that right?
Oh yes, no, it's true. So I think like I mentioned on the gearing position, we're actually looking at how we're going to fund our projects. So we do have an outlook on how we're going to fund our projects, and some of those will be able to utilize external debt to be able to fund that.
So, looking forward now to like your plans for investments, right? Do you have some investment strategies, and if you do, how are those strategies? How do they fit into the overall Zambia Sugar financial objectives?
So I think when you look at where we're going, and I think we talked about the cost going up. So how do we manage the cost? So for high fixed cost industry, the best way is to try and dilute those fixed costs that we have. So how do we do that? It's through improvement in production. So part of the investments that we're looking at in terms of the capital is towards improving the plants as well as the cane growing area. That way we'll be able to produce more and at the end of the day manage those cost escalation and dilute them. So that's one of the areas that we have in terms of investment strategy. So looking at the plants, being able to make more sugar to meet the demand. Then we're also looking at supplying the sugar that each customer needs, you and I, at every level of the market. So, and that talks to our packing plant flexibility and being able to meet the customer needs. So, yeah, so those are the main strategies that we're looking at.
I'm interested, that's got my interest, my attention, the packing size flexibility. So is this where Zambia Sugar is going, Pamela, packaging for sugar in this product? Is that right?
Yes, so we're actually looking at being able to provide the same quality of the sugar to each and every household. So we do have other households that may only have a small portion, a small amount of money, and they would want that quality sugar, not any other packaged sugar. So we're also looking at those. So each and every consumer will be able to have access to that quality sugar.
I think that's a great initiative. Okay, you've got your right there. If you have a message for the person sitting at home and about your performance and Zambia Sugar as well.
Oh, thanks so much, Larry. So you see, it is an exciting time for Zambia Sugar today and as we go on. So see, we're looking at each and every household have that safe sugar, high quality, irrespective of what level you are in. So Zambia Sugar is about serving each and every one of us, and want to put that sugar on the table.
Thank you very much, ladies and gentlemen. This has been Nyondwa Mukosa. She's the acting CFO, Chief Financial Officer for Zambia Sugar. My name is Clarence Chongo. This is the FIZ Show. Thank you very much. Till next time, get